to go live. Hopefully, you can hear me. Today, we're going to be talking about news of the day. And I'm going to be going through all of the news that I think is interesting at this point. So, before we do that, I'm just going to say hello on the chat. And hopefully, you hear me out there. And I'm going to get started in a couple minutes. Let's see. I wanted to share some of the work that's being done by my valuation masterclass students. So recently, we've been going through some of the news of the day, and so I thought today now would be a good time to go through the implications of this news. So let's get started. I'm going to share my screen and go through a bunch of stuff. So let's go. So again, what we're talking about is news of the day, and it's April 28th. Now, I'm going to cover a bunch of things that I think are interesting news items that could lead us to some investment themes. I want you to ask your questions in the chat and welcome everybody into this discussion. So, first news story, EU to allow US travelers to visit this summer if fully vaccinated. And this one you can scan to get the article. It's in Forbes, and it was published on April 25th. So what does it mean? Well, let's look at it in more detail. EU Commission President Ursula von der Leyen has shared that vaccines used in the US have been approved in the EU. And this paves the way for all 27 EU members countries to be able to accept tourists who have been vaccinated with Moderna, Pfizer, and BioNTech and Johnson & Johnson shots. So it's an optimistic comeback potentially for the EU tourism industry. I know in Thailand, tourism has been crushed. But based on this news, it might be time to allocate some capital to the tourism industry. Recently, Accor has seen its share price hit an all-time high in 2021. Now, the risk is that most hotel chain companies' shares have already been seeing rises and high valuations. In fact, one that I was just recently looking at was Marriott, which is at a trading peak as well. So let's move on to the second one. I've got 8 great stories today. Uranium miners seeking a foothold take unorthodox approach buying uranium. This is coming from Wall Street Journal, and you can scan to get that article. New U.S. miners are aggressively buying uranium, and these new miners are making deals with clients before those miners have started digging their mines. And these newcomers are aggressively purchasing uranium in the secondary market from brokers and other places to reassure their customers in case their mining projects fail. So what does it mean? Well, 3 ETFs could give investors exposure to rising uranium prices. This increased demand could put upward pressure on uranium prices in the short term. So one way that an investor could play this is through uranium miner ETFs. And I just looked at 3 of them that could potentially be interesting. Now, again, if you have any questions, feel free to leave a message in the chat. I'm happy to take any questions. In fact, I'm just going to say, any questions? Feel free to put them in there. I see Titikon and Ravi out there. All right, let's continue on. The next article is Russia ditches the dollar for bulk of its exports to China. This one I find interesting because, you know, what I'm concerned about is war. And I think that it's been a while since we've had a real serious war, and hopefully we never will have another one. But I'm a little bit afraid that what's happened in the political landscape in America is that the Democrat Party has really taken on the anti-Russia angle so hard because they thought they were going to knock out Trump with it. And the result is that they really, really became anti-Russia. And now with Biden in charge, they have the potential to put that into action. Now, why do I think it's a serious issue? Well, Russia is a nuclear power, number one. And the other thing is that the US has unbelievable financial war power through the use of the US dollar and the US financial system. And basically, sanctions, US can apply financial sanctions and basically cut any business in the world out of the US global, dollar system. And that is a disaster. And that's exactly what they're doing with Russia. And I'm not saying that I'm defending what Russia is doing in their business and in their politics, but Russia and its military is tiny compared to the US. I can't imagine that Russia wants to pick a fight or a war with the US. So let's look at this news article in a little bit more detail. Russia is working to minimize US dollar dependency in bilateral trade. Russia's dollar share of exports dropped for the first time below 50% as it moved to reduce its vulnerability to US assets and minimize the effects of the US sanctions. The drop comes as Russia's trade with China is shifting more into euros. Now, where this gets interesting is it's driving a shift away from the US and towards China. The move by Russia is a multi-year campaign to gradually de-dollarize its trade through new partnerships. And I was just looking at the website of the Russian central bank, and I found that 21% of its central bank reserves are invested in gold. I know they've been increasing these holdings in gold for a while, but I know also now that they're continuing to try to reduce their reliance on US dollar. That's not easy. Now, this could feed into China's foreign policy to become a major player in the global economy through its currency. And, the big thing that I'm worried about in this particular case is that the US is using a very, very strong bludgeon through its sanctions, and it's using them often, and it's using them hard. And it's just like war. If anybody cut off the ability to access the global financial system to the US, they would absolutely see it as an act of war. And what I'm concerned about is that the US, by squeezing this weapon so hard, they're just pushing Russia and China to have to come up with an alternative system. So now I see some questions. So I'm going to try to answer some questions as I go along. So Kritin says, in the long term, will the increased supply from newer mines lower uranium prices? That's a good point. So now you have miners proposing to dig mines and saying that they've got sales contracts for uranium, and then they're buying up excess uranium in the markets. But if they actually start to dig those mines, then they bring supply into the market. Now, maybe they bring supply into the market and they've pushed up the prices enough that it compensates. And I would say it's a long-term trend for uranium because of the desire to go green. Basically means that nuclear power is going to become one of the options out there. So I would say short term, they're pushing up the uranium prices, and long term, they could be pushing down uranium prices. But that depends on what long term demand is. On the one hand, everybody wants clean air and they want the Green New Deal type of stuff, but are they willing to accept the risks of nuclear power? In the past, the answer was no, but maybe the answer now is yes. Robbie says, do you suggest an ETF or an individual company for uranium? It's such a narrow trade, Robbie, that I would say it's probably better to just do a uranium ETF. But I would also say you want to be careful not overexposing yourself to this one commodity. So if it was an ETF like the ones I showed earlier, I would say that you're probably talking about putting 5% of your money into that, of your assets. All right, Titigon says, what do you think the U.S. would do if China shakes hands with Russia? And the answer to that is that China has no choice and Russia has no choice. They have to build tighter alliances. And the result is they don't want to. I'm sure both of these countries would rather have better and better relationships with the U.S., but the U.S. is just on a war path right now. And the result of that is that it's driving them together. Now, I would say that Russia and China are never going to become a powerhouse between the two of them. But what they often say is that a common enemy makes enemies friends. Now, Suchai says, do you think there's a currency war between the U.S. and China? If so, what do you believe is the outcome? I think in the short term, there's going to be some currency war and potentially a hot war and potentially a tech war And I think we're seeing some of that tech war happening already. We've already had a trade war going. So the answer to that question is that I think that in the short term, the US dollar will be strong because the US will use its military power to fight back. But in the long term, military power can't hold back a country that's facing a huge amount of debt. All right. So in the long term, US dollar weakness, and in the short term, probably US dollar strength. Ravi said, in terms of long-term trends, Russia wouldn't this decentralize the US dollar. I'm not so sure what you mean by decentralize the US dollar. So you may have to clarify that. I'm going to continue on. Let's see. Okay, China and Russia are power players and have huge influence in Southeast Asia as well as Eastern Europe. Yep, they definitely do. And that's why I think the US has to be very careful about that. So let's continue on. I think the next story we're going to look at is supply lines at risk. I believe this is the next one. Hold on. No. Apple ISO 14.5 update is shaking up the app economy. The long-awaited privacy changes on the iPhone will redefine how apps make money. Now, I know about you. I don't know about you, but for me, I have upgraded to the new iOS, and it does ask me now a lot of questions related to privacy. And so basically, it's an interesting situation. Apple's privacy change will redefine the digital and ad industry and how apps make money. The new change blocks ad-based businesses and apps companies from using personal data. And the impact on users of Facebook could face challenges. Facebook, for example, may shift their business model from ads to e-commerce. And Google may experience lesser impact because they have enough data collected. The point is, many years ago, Facebook did a shift to say majority of our users are accessing Facebook through their mobile phones, and therefore they've optimized for that. And if those Apple mobile phones don't allow them to share data and get data of their users, then it just causes things to be more expensive for Facebook. Google has less problem because Google doesn't have to operate on top of the app. The app for Google is a little bit different from what we see on the iPhone. So Apple gains the most in the long term from this move, despite loud protests. Apple could receive more commission revenue when customers purchase apps, and the shifting ad business model of Apple could drive the Apple stock over the long term and leave Facebook scrambling to redefine its business model. Now, I don't know about you, but every time that I do Facebook ads, I feel like I'm making a donation to Zuckerberg, right? To Mark Zuckerberg. So I don't have a lot of love lost there because I have made a lot of donations to Facebook ads. All right. Now, this one's kind of a funny one, but it's very interesting when you think about what's happening with the world of shipping. Business Standard magazine or article says supply lines at risk as shipping containers topple over at alarming rate. My goodness. The shipping industry has seen the largest spike in lost containers in 7 years. Now, what is this from? Well, an e-commerce surge means shipping companies are under increased pressure to speed up their deliveries. And containers stacked higher than ever has caused many to plunge into the ocean. More than 1,000 containers have already fallen from ships in 2021, compared to about 3,000 in all of 2020. That reminds me of the movie All Is Lost. And I'll talk about that in a second. But let's just look at this. So the shift towards air freight may continue to lead to a short-term boom in prices. Increasing frustration regarding COVID-19 related inconsistency of maritime shipping is pushing retailers to shift towards air freight. And there's a near 400% increase in air freight, and it could drive air freight stocks higher. Right now, UPS, FedEx, and DHL, all of them, I was just looking at their share prices, all of them have already recovered quite a bit, but it could continue to be high. Now, what do you think of that picture in the bottom right-hand corner? You can see those containers tipped over. Did you see the movie All Is Lost with Robert Redford? What a great movie. Amazing movie. Basically, there's only one word in the whole movie, and it's just such a compelling movie. But it has to do with a guy out on a boat who by accident slams into a container that is floating. I highly recommend this movie. All is lost. All is lost. Now, let's continue on. In Barron's magazine, it says Intel says global chip shortages to last 2 more years as car makers endure. So what's going on here? Well, work from home caused by COVID-19 boosted demand for semiconductor chips. Now, companies that rely on semiconductors face increased costs, missed sales targets, and production delays. And there's an undersupply of chipsets that could last between 6 and 24 months. Also, this could mean a temporary surge in semiconductor stock prices. Companies that rely on semiconductors could struggle, on the other hand, to maintain revenue and see share prices fall. Price falls could eventually make shares of affected companies attractive, like Volkswagen, Peugeot, Apple, and other companies that are reliant on it. All right. This one's interesting. JP Morgan to let clients invest in Bitcoin funds for the first time. Now, if you've got any questions, make sure to put them in the chat. I'm going to go through some of the questions that I see right now. Let's see. So, Sundar, nice to see you. Where will Qatar and Saudi feature in this analysis? Yeah, it's a good point. I mean, in fact, I would say that Saudi and Qatar are caught in the middle, but ultimately I suspect they'll end up siding with the US, and the US will push hard to try to keep them with them, and also to keep the oil related to them. All right. Titi Gone says, do you think Facebook will back off from the App Store? No, they can't back off from the App Store. They just make too much money out of that. So they need the eyeballs. So they're going to have to figure a workaround. Rahul Joshi says, is this the impact of Suez Canal incident? It's minor. That was a minor impact. It was an impact, you're correct, but it's just a minor impact. Now, we're just talking about the general shortage. I mean, one of the problems that we face is that there's less trade going on. So basically, I'll tell you a story about this in just a second. In the case of my business, one of my businesses, Coffee Works, we import products from China and sell them in Thailand. And we had faced delays because of the fact that the Chinese suppliers couldn't get containers. So many containers had been shipped to the US full, but there was nothing coming back to China or to Asia. And as a result, there was a supply shortage of containers. That's slowly clearing up, but I would say that's one of the things that's driving it. Now let's see if we've got any other questions here. Sompot, nice to see you. Congratulations on your performance. You're always doing so well. Should consider diversified commodity ETF like DBC. Now, actually, Sompot, I don't know DBC, but I'm going to ask if anybody here knows DBC. You know, let's take a look at DBC ETF. But what I've found is that commodity funds generally do not have uranium, or the uranium aspect is very, very small. So if somebody really wants to play this uranium theme, they're probably going to have to do it through an ETF. It's just one of the 3 that I showed up there. But I can look at that one a little bit more. All right. Ravi says, seeing the trend of these cryptocurrencies being mainstreamed by institutions, would you say that financial institutions may not only come up with their own products, but lobby governments to ban cryptocurrencies altogether? What are your thoughts? I do think that that governments, there's definitely a risk that governments ban cryptocurrencies. Now, they can't really ban cryptocurrencies, but they could try to squeeze cryptocurrency exchanges. They could try to squeeze banks that don't allow any interactions. So imagine that you have a cryptocurrency exchange, for instance. I know it's happened in Nigeria, where basically the banks tell, the central bank tells the banks, you can't have bank accounts. You can't allow those cryptocurrency exchanges to have bank accounts. So how are they going to pay their employees? Well, if they're paying them cryptocurrency, that could be one way. But I think that there's definitely a risk of that. And I think that also the Fed and the Chinese government both would love to have their own digital currency. It's good for a lot of different reasons. But one of the best things about it is that we know now, after COVID for 1 year, is that governments love control, and cryptocurrency that they have gives it a lot more control. All right, Ravi also said, is this the end of cryptocurrencies as being free from governments and institutions. I suspect we're not there yet. Governments haven't taken strong action. I know the former Secretary of the Treasury, Mnuchin, didn't like crypto, but I don't know exactly what the plan is from the Biden administration. All right, Chris, what's your opinion on making an investment in Bitcoin in 2021? Personally, I would say, if you take 1 to 3% of your assets and you consider putting it into Bitcoin or some other cryptocurrencies, it's possible. I would say you just want to make sure that you do it with the amount of money that you're able to lose. Just be very careful because they're very, very volatile. And if you're just beginning in that space, you could lose a lot of money very quickly. Okay, Warut says, when do you predict the shipping industry to return to normal? I think it could be years before we get back to normal. I see so much demand destruction that's not going to come back quickly. And so I fear that shipping is going to be down for a while. Now, I'm going to go back to the last couple of articles, and then also if you have any questions, feel free to ask. So let's go into the last article. We were talking about the cryptocurrency, and we were saying that JP Morgan is buying into it. And basically the point is that if banks are getting behind it, it could be that governments are getting behind it. Because remember, banks are heavily regulated by the central bank. And if the central bank allows them to do it, then it could be going more mainstream. All right, ladies and gentlemen, we've now come to the final article. Now, I'm not a smoker, but this comes from the Wall Street Journal. The Biden administration considering rules to cut nicotine in cigarettes. The policy could be paired with proposals to ban menthols. FDA must decide whether to pursue menthol ban by April 29th. So there's a deadline that's facing the administration. So it's potentially a crackdown on the tobacco industry. The US FDA will decide by April 29th whether to pursue a policy of banning menthol cigarettes. The administration is also considering lowering allowed nicotine levels in cigarettes sold in the US to make smoking less addictive. The short-term impact on US tobacco companies, well, basically since the news has been released, we can see that the major tobacco brands have been hit. The possibility for a policy change could take years, if ever, and therefore strong likelihood that those stocks could bounce back. But if the FDA decides to really squeeze, then we could be back at the same situation where the share prices are down. That's the news of the day. If you have any questions, oh, look, I got a little colorful thing around here. If you've got any other questions, feel free to ask them. I'm going to go look at those questions right now. Let's see. Almasa, hi, nice to see you. My good friend. So Almasa was a guest on the podcast, My Worst Investment Ever. Just go to myworstinvestmentever.com and type in Almasa, and you'll get to know her. She's a lovely, lovely woman. So Almasa says, Bitcoin is definitely a serious future actor of the global economy. At short term, it will be the new stallion versus gold. Yeah, I do think that, the issue that we're facing is gold has a lot of value. There's a lot of benefit. It's a currency that's been in operation now for thousands of years. So I don't think you want to write off gold just yet. But Almasa's point is that Bitcoin is rising. Even a few years ago, you could say that a person like me, kind of a more traditional investor, wasn't even looking at it. But nowadays, I'm looking a lot closer. And I would say there's nothing wrong with trading in Bitcoin as long as you, number one, are only trading the amount that you're prepared to lose. I like to say start at 1 to 3% of your total assets. And number two, you're prepared for a huge amount of volatility. Now, sometimes in the stock market, when things get volatile, people say, well, I'm just going to hold that stock for the long term. But for Bitcoin, you don't know. It could stay down. It's just very, very hard to predict. And I could say in the valuation masterclass where I teach, I would say we try to value assets. Bitcoin is not an easy asset to value. So I would say right now, gold has been hit. It hasn't been that strong, but inflation hasn't really started to rise. I think that inflation will rise soon. All right, so let's look at the next one. Munling says, do you think with Russia ditching the dollar, this might affect the price of Bitcoin to rise too? Yeah, I don't think so much because I don't think the world cares about Russia and dishing the dollar. And I would say that the Russia amount of trade that they're doing is not so huge on the global market that it's going to have an impact. But yes, I would say it's a tiny little impact on the positive. Now, Abhishek says, do you believe Elon Musk has an influence on Bitcoin's price? Yeah, I think so. I mean, when he pumps up Bitcoin and talks about it and buys it into his company, into Tesla's balance sheet, it definitely has an impact. So it is a real possibility that he is impacting, but that impact won't be huge and it won't last for long. It could be reversed very soon. All right, let's see. Okay, another one. Here we got a question from Superkit. Nice to see you. What do you think about the 2030 agenda and the Great Reset impacting to the future world economics? How can we plan on asset allocation to overcome this event? Well, I think the Great Reset is a bunch of bullshit, basically. It's a bunch of rich people that got together at Davos for the Global Economic Forum, and they've got their plan for what they want from us. And that they want is to reset everything, but where is the reset? This is a bunch of crap. It's a reset to your wealth. It's not a reset to Bill Gates' wealth. It's not a reset to the wealth of the people that are at the World Economic Forum. It's ridiculous. It's not their reset. In fact, their wealth is growing. So their idea, which one of their ideas that's kind of amazing, is to say you'll own nothing and you'll be happy. So who owns it? I would say I'm not particularly pleased with the Great Reset. And I feel like the most important thing about the Great Reset is that people rise up against it. Now, if you want to talk about reset the way we do business and all that, okay, I'm open to that. And if you say, okay, we want to share resources more equally, well, that just means that the rich have to give up some of their wealth. Why would they propose something that would give up their wealth? Well, they're not. They're proposing to give up your wealth, which they're happy to give up. Now, next one. Okay, Kritin says, how much do you think other tech companies aside from Facebook will be negatively affected by the iOS update? I would say, Facebook is just deriving so much value from their understanding of your behavior on and off the Apple device. And the point is, and on and off of Facebook app. And if they can gather information from all other sources, then they can have a huge amount of value. I would say most of the other apps out there and most of the other programs are not relying nearly as much as Facebook is. So I definitely think Facebook will be most negatively impacted. And the evidence to that is just the fact that, Facebook has put up a pretty strong fight against it, trying to get Apple to back off. Wow, that was a lot of great questions. If you have any more questions, feel free to put them in. And then I want to say that thanks to my Valuation Masterclass boot camp students, you guys are awesome. This was our first time to go through the news, and I think you did a great job, and there's a lot of great stuff that we can talk about. So here's to another round tomorrow of great news of the day. I hope everybody has a great day and a relaxing day. Don't forget to spend some time with your family. And if you live near your mom or dad or your daughter or your son or your wife, give them a hug. Have a great day.